What's up, guys? It's Ray J back with another video. And in this one, I want to break down what's happening with the election and talk about why I think there's going to be a recession coming, regardless of who ends up winning, and how this could end up affecting things moving forward. But just know that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed 15 in total, not to mention an 8.1% APY on uninvested cash. The offer ends very soon, in just a couple of weeks. Anyways, now let's talk about the market. So, one thing worth mentioning is the fact that there's two candidates running for president, and they have different policy ideas. Now, with these policy proposals, I just want to say that it's going to have a big effect on the way that the market is viewing a lot of different things. One of the candidates wants to increase tariffs on China while cutting taxes in the US. The other one wants to do things a little bit differently. But regardless of what they do, I still believe there's going to be a recession because of so many different factors. The first thing is, and the factor that kind of like initiated this would be the fact that the recession was due after the money supply ended up increasing. So when the money supply ended up going up with all this money printing by the Fed during the pandemic period, it was not a sustainable approach because when you increase the money supply like that, it leads to a big shift in not only inflation, but it affects the monetary value of the US dollar and a bunch of different things. So, with this increase in the money supply and this increase in spending, the habits weren't so sustainable to the point where the government could just keep spending pandemic level amounts of money for every single year, which is why the government had to kind of like slow things down. And then on top of that, it led to a surge in inflation. You guys remember how we saw inflation almost reach double digits in the US, and then the Fed started raising rates. So by raising rates, the Fed is trying to basically manage inflation, but the problem with doing that is it's going to lead to a increase in unemployment. So unemployment is going up right now. We're starting to see weaker jobs numbers. If you look at the latest reports, they're not as good. And I think that the numbers could be even worse than what's being reported. I personally think there's a very strong possibility of that. And I also think that because of the stimulus that came out, it makes it a little bit easier for the governments to kind of like show us more biased data. And it may take even longer for the true recession to come than what many people would expect. Because when you raise interest rates, right, the effect it has on the economy is going to be very delayed. So the economy contracts 12 to 18 months later for every single one of those rate hikes or cuts. So what this means is the Fed is barely starting to cut. It's not going to affect the economy. These cuts are not going to affect us for a while. The real effects of rates are still coming. And I think that suggests that unemployment has a way to go. There's going to be more upside coming to it. The Fed is trying to keep everyone calm approaching the election, saying everything is okay. It's the same Fed that told us everything would be okay in 2008. The same Fed told us inflation would be transitory, although that was not entirely the case because it took a while to get inflation down. And the effects of it are still kind of like transcending right now. So what's going to happen is this, and this is what I think is going to essentially pan out. We're seeing a big shift in the way in which the government is kind of like managing its money. And inflation, we can't say for sure it's something that's just done with, but it still is a big issue because the effects of the inflation remain. What the Fed is doing is they're not going to bring prices down. They are slowing down the rate at which prices are going up. So prices are so elevated that's hurting the lives of everyday Americans and their spending power. And Americans have less spending power by the days. Okay, that's the honest truth. So what does this mean for the stock market moving forward? I'll talk about that in just a minute. So we're in this situation where interest rates are elevated and the effects of them are going to show, I would say by next year, you're going to really see it, guys. Unemployment is going to be spiking. And what's going to happen is the Fed is trying to stop unemployment from going up too high. They're trying to keep inflation down. They're trying to manage the money supply. They're doing all these different things. And it becomes very, very difficult for them to do that. So Elon Musk was saying a lot of things about how, excuse me, about how there are a lot of hardships coming to the economy for the long term. For the short term, he's very much in favor of cutting governmental spending, at least managing it. And I do actually agree with that. I think that our government could be a lot more efficient. But just keep this in mind. He also did kind of like anticipate that there could be some turmoil with the new proposals that are coming out, at least temporarily, right? He said basically there could be some basically economic hardships, albeit temporarily, even I would say regardless of who ends up winning, regardless of who's winning, not just because of one candidate or the other, regardless of that. Okay. So what does this recession mean? How is this going to affect the economy? I think that one thing that's oftentimes overlooked would be the government's way of making money. I'm trying to make this very simple. The government makes money by borrowing or taxing. And then what's going to happen is what the government, what the bonds market, we have the bonds market, right? The bonds market thinks that the government's going to make less money from taxes. That's what the government's thinking. Now, what tends to happen is we get initial reactions from policy shifts and from these politicians, from candidates, and it takes time for the economy to adjust. So if you start cutting taxes, it's going to have like a shock to the economy initially, and then as time goes on, the economy adjusts. That's what I believe. So the economy, the bonds traders are thinking that the government's going to see a shock to their streams of revenue, and because of the fact that we might see some tax cuts initially, but as time goes on, of course, things could normalize. So because there's going to be a shock with possible tax cuts just initially, just in the very beginning, the first year or so, um, they think that the government is going to start having to issue a lot more treasuries. And when there's more treasuries, more and more and more of them are being issued. The government's basically having people just borrow. The government's basically just like borrowing money essentially, and they have to pay interest on it. So what's inversely correlated with the treasuries is going to be the yields. So when there's high supply of these treasuries, the prices go down, yields go up. And that is the interest that the government has to pay on these loans, basically. So the problem is the government has high interest. Interest is going up and up and up to a point where it's becoming less and less sustainable. It's becoming tougher. Right? I believe that the interest alone could be reaching like the trillions. So we need a reset. Plain and simple, we need a reset. Regardless of if it's, Kamala Harris or Trump, there's going to be a reset, guys. It doesn't matter who's going to win. I believe it's still coming. And one of the things that's showing this would be the 10-year treasury yield. So the yields are going up and up and up to the point where it's not sustainable. And it's very similar to what happened like around 2008. If you go back like right over here, let me pull up the monthly on these yields, just kind of show you guys what this looked like. The yields are now at their highest level since this is about like the 2010 period, right? So we're now reaching these levels, and if we do end up surpassing like this 5-6%, that's when things become a lot more scary. So what's essentially happening is yields are going up, interest rates are becoming very expensive for the government. So they may have to create some kind of recession, some kind of thing to reset all of this, right? They're starting to cut already, but it's not slowing down yields yet. The effects are very delayed. So that's why the Fed may have to artificially make this recession. And their way of doing it is through their interest rates and also many other factors, such as how they affect their balance sheets and such. So if there's the recession, what does that mean? That means that the US economy is going to contract, and we're going to likely see, a slowing, if not negative GDP for 2 consecutive quarters. That's by definition an economic recession, while simultaneously unemployment is going to be going up. And unemployment is still technically on an uptrend. It is still going up. So what does this mean for the stock market? Honestly, guys, what I would say is that, and I said this before, I don't think that the stock market is at sustainable levels for now. I think that there's going to be a corrective phase that's coming at the very least. Okay. So when you look at SPY, go back to the chart like this. When there's a recession, the fear that's associated with it, we had this rising wedge like structure that we were kind of like forming for quite some time. It's starting to break now. We have these gaps to fill. There's a gap down here in the 530s. I think this gap might get filled. At the very least, the 550s are going to be coming. We have another gap down there. We're going to start filling a lot of these gaps, and the market's going to get a little reset. I think it's going to be coming. Could we rally after the election and then maybe the drop because of the recession comes later, or is it about to start now? That is to be determined. But I just want to say that I do believe that there's going to be a reset coming. I'm not saying it's going to happen tomorrow. Could take many months, could happen early next year, but it's going to be difficult. And I just want to give you guys a warning about that. During this recessionary phase, unemployment is going to go up. A lot of people are going to be losing their jobs. And I just hope that it doesn't happen to you guys. I hope you guys get to keep your jobs if you do have them. And I just wish for the best for everyone. But during times like these, you have to be prepared and you have to be ready. And I just want to wish everyone the best through these hardships that could be coming. For Tesla stock, the next factor is going to be the election. So I can't really predict what's going to happen with that. It depends on who wins and also what ends up happening. But we do have this big gap to fill. If we get some kind of negative reaction, we could come down to fill this gap on Tesla. It's always a possibility. We need confirmation, which is going to be breaking two of these EMAs right over here, the 242 and 235 levels. Then we could be filling that gap. When you zoom out of Tesla like this, whoopsies, what you'll see is there is a large inverse head and shoulders, but we do have these gaps below. Do I think Tesla will come down to fill the gap in the 130s? It's always a possibility, but no. Right now, there's no sign of that happening, so you shouldn't assume Tesla's going to crash down to the 130s yet. If we start losing our 200 EMA and we start losing 200, then I'm going to be open to that possibility, and I think that there's a good chance it could be happening. But right now, I don't see that happening for the time being. I don't see it happening. Maybe if the recession is announced next year, it could happen, maybe. But as of right now, I don't see it happening. That's why my strategy for Tesla is not to just YOLO everything and just go all in. I have a tendency of liking to just dollar cost average. So if Tesla drops to 220, I buy a little bit. If it goes down to 190, I buy a little bit more. If it goes down to 180, I buy a little bit more at these cheap levels. And these were the buying opportunities we talked about in my earlier videos. I hope you guys took advantage of them because who knows how low Tesla will go. So we don't have to fill every gap. We don't have to fill this one down here. It could happen because of the recession early next year, maybe, but I don't know for sure. At the very least, we're just going to focus on these levels for now, so don't worry too much about that for the time being. And we'll be watching to see how things end up going. So for now, could we fill this gap? It's a possibility. We're going to be watching this first, and then we'll have to see how things end up going. But give this the time it needs, and we'll see how things end up developing. So for the economy, I believe there's a recession coming. I really believe it, looking at the 10-year treasury yield and looking at our inverting yields. I think there's going to be contraction that's coming, and it's going to slow the markets down. But it's going to lead to a very good buying opportunity for massive rallies for many, many long periods to come. Do I know when it's going to come? I don't know for sure. I don't know many details about it. I could just tell you that there is uncertainty, and we just have to be very, very patient nonetheless. With that being said, I thank you all so much for listening. I hope this video was as clear as possible about the shift that's happening to the US government right now. Remember, I'm not trying to be political when I say what I say, regardless of who wins, whether it's Kamala Harris or former President Donald Trump, regardless of who wins, there's going to be contraction in the economy, and you have to really keep that in mind. Okay, guys? So I'm trying my best to be very unbiased when I say that, right? I'm not going to go over all the details of these politicians or these candidates, whatever you want to call them. And I respect your opinion. If you support one or the other, that's your choice. Completely understandable. But there is going to be hardship because of the fact that monetary supply has been increasing to some large extent. I think that there is a negative effect of that, and we're going to see it most likely very soon, possibly early next year. Could they be delaying the bad data, the announcements until after the election? Maybe. But just remember my warnings for the next couple of years. Just because I'm saying there could be a recession coming, it does not mean the market has to crash tomorrow. That's not at all what I'm saying. I'm not even giving you guys my predictions for the next few weeks in this video. I'm just talking about something for the longer term that is due to come soon. Okay? That's all this video is about, why I still believe what I believe, and hopefully you guys found some value in this video. I thank you all for listening. Please have a great day. I will be back for another update. Until then, have a great day and peace out.